What's up, everyone? It's April 24th, 2025. Hope you guys are having a good day. We're going to do a breakdown of the E-mini. Bulls had a nice rally and a bull channel today. Before we get started, I want to give everyone a quick shout out. I appreciate the new subscribers and all the members. A new members video is going to be dropping this weekend. It's how to correctly use measured moves. We're going to talk about trading range measured moves and leg 1, leg 2 measured moves, because that seems to be in high demand. So I want you guys to have those targets so you can start hitting them. So yeah, let's get into it. Daily chart is looking good. For the bulls. I mean, actually, that's not even the right words. I shouldn't say daily chart is looking good because I don't care what happens. We're going to trade it up and down. Daily chart is looking good from the bull perspective. Bulls are finally breaking above the EMA, which hasn't happened in a long time. And now we've got the full market cycle within the daily chart. You have a bear breakout with multiple legs down, so you could say leg 1. This is a loose count. Leg 1, first pullback. Leg 2, pull back, leg 3, pull back, leg 4, market cycle reset, breaks out below. So leg 1, pull back, leg 2, pull back, leg 3, pull back, leg 4. That's a higher low for the bulls. Bears try and sell, and it rallies. So now we have a big down, big up. That officially puts us in a trading range, a new trading range, not from this one. And then we go sideways under the EMA. Bears want to make a new low. It's a long way to go. We start to sell off, such a sell off. We get just below the 50% mark of this big bull bar, and now we're rallying. 2-bar reversal right here. This bar spike starts here, so the spike starts here. We start to rally. We're breaking out above the EMA. This is the first time bulls had an attempt here. They had 1 bar and it sold off. Bulls again touched the EMA here, sold off. Bulls touched the EMA here, and it sold off. And now look here, bulls actually got a bull bar closing above its high. The problem with this bull bar is it didn't close far past beyond yesterday's range. So this is the yesterday's high, and it rallied, but then it sold back off, just closing like 1 or 2 ticks above it. This is the overnight session, so first gap bar in a strong trend generally gets faded. So we'll see tomorrow if bears are able to make 1R or bulls able to make 1R. Or do we go more sideways for a little bit? We are at the trading range highs. Well, that would be the trading range highs. A little bit away from it. There's a motorcycle outside the window. I don't know if you guys can hear that. I apologize if you do. So that's the market cycle on daily chart. Let's talk about the 15-minute. Again, I like to trade the market cycle with the leg count, and I look for how fast a trader makes 1R. So for instance, I said that kind of funny. So the bulls that bought this bar right here, they made 1R very quickly, and then I'd set a limit order here, and in this case, I wouldn't get filled. It's pretty annoying because I have been missing some good trend days. I've missed a lot of this rally. I missed a lot of that sell-off. But the reason I decided to deploy this type of system is because I'm getting saved on tight trading range days. And the market is range bound 80% of the time. So I'm giving up something here to get something there. And that's not forever. That's just maybe for about a year or 2 until I really understand this one system. And then I'm going to deploy. I already have a 3-bar breakout system. I just haven't been trading because I want to only do one thing for a very long time, which will be trade limit orders. So from the market cycle perspective, this is including yesterday's price action. We gapped up and we pulled back to the 50% mark. Could say leg 1, pull back, leg 2. We could say leg 1, pull back, leg 2, pull back, leg 3. Now we have a bear channel. That puts us into a trading range here. And then we're at the trading range lows, start to rally. We have a light breakout, not the strongest because it doesn't go far past the range, but the breakout could be leg 1, pull back, leg 2, pull back, leg 3. And if we didn't read the legs like that, you could also read it like this from the bottom of the range. Leg 1, first pullback is this bear bar, so that's a shallow reversal. It's a better buy. Leg 1, pull back, leg 2, pull back, leg 3, pull back, leg 4. And look at the leg 4. We're more sideways, but then leg 5. And even here, there's a small trading range that breaks out. Here, we get the breakout. Leg 1, pull back, leg 2. Very bad close for the bulls, closing below its midpoint and more tail. There's more sellers above this bar than bulls willing to buy. So yeah, let's get into the breakdown. Again, I appreciate all the questions you guys asked me. Really cool questions. The Discord is growing. There's going to be an invite to the Discord in the link in the comments below. So hit the link and talk to me. It's fun. I'm starting to meet a lot of people. You guys are keeping me busy in the day. I appreciate it. I have a trade set up out here on my right side, and I didn't get filled and the market rallied away from me. So I'm I'm just watching it real quick. This is what I'm watching. So I wanted to get filled above this bar, how I just talked about on the 15-minute chart. There was my limit order. I wanted the market to come down here and then tag me. Didn't happen. Now this bar, if it gets 1R, I'm going to slide my buy order up here. My new stop will be here. My new target will be there. This is a very systematic way to trade. I do, again, lose out on strong trends because the market won't put, just like that. I just lost out on a trade, right? Here's 4 bars closing on, mostly on their highs. We got 1 tail here. We got 5 bars closing on their highs, 2 tails. And I missed out on this trade. But by me, I'm missing out on one thing here. I'm gaining something here, and I'm sizing up a little bit more because I understand my risk. I understand my targets. I know what I'm looking for. I see the setup. Wait for the entry. If it gets triggered, great. I'm in. If I'm wrong, over a certain amount of trade, over 100 trades, I will be profitable. So I do like trading a system, and everyone in the Discord, I do preach to trade a system to begin with for at least a couple of years, and then over time, the system itself will teach you how to become a discretionary trader. I remember when I first started trading, it was very hard for me to get behind systematic trading. It takes some time to become a systematic trader because you lose a degree of freedom when you trade a system. And I just showed you guys how I lost that. So this bar hit 1R. I'm glad this is happening because I hope I get filled within this video so you guys can see exactly what I'm doing. And over time, I will be going over this in the members videos, but I want to have a basic knowledge of market cycle, gaps, wedges, all throughout the year that I'll be posting in the members section. This weekend, the members are going to see how to do measured moves. So it's going to be how to do trading ranges and how to do leg 1, leg 2s. So let's get into it. Bar 1, bear bar. Yesterday we gapped up, double top, triple top, however you want to call it, sells off, puts us into a trading range for most of the day. Small rally, testing the breakout points below 24, sells off here. Then we get to 36, and now we're at trading range lows. Trading range high is the high of 14. That's the first bull target, and then the next bull target would be a measured move of this. So if the breakout holds, that's where the bulls want to get 56.16. I'm trading NQ because it's just a little more points because I like to trade multiple contracts. I pay less commission. So that doesn't matter. It's almost as identical price action. So bar 1, bear bar, it's closing right around its midpoint. It has tail. That's not the best close for the bears. That's acceptable for the bulls. It has a tail bouncing off the EMA. There's a breakout here, 75, 76, 77, 78 is that first pullback. It looks kind of menacing, and you would think bears are able to make 1R, but if we just look at it, bulls made 1R by the time bar 3 printed. So that tells you something already if you're looking to short. Bar 2 sells off below bar 1, rallies back to the high. Now we have 2 bars, and this is starting to look like a 2-bar reversal. And then we see bar 3. Strong bull bar, breaks, closing on its high, very small tail. So bulls were buying into the close of this bar. That's good. And now we see bar 4 print, and we have a gap. If we see 2 gaps at the open, you know the one side is trying to do something. So we have a gap. Bears had limit orders above 78, and now they're trapped here. Market never pulled back to 50%, so they were forced to buy back shorts. This is why second legs are the highest probable trade, and this is why I constantly talk about second legs. Second legs are the highest probable trade because there's 3 types of traders looking at it. There's the bulls that bought bar 2, and they are looking for the breakout. There's the bears who are now trapped, and they have to buy back shorts. And then there's us, the traders who are looking to get into the market. I ran through that a little quickly. I'm gonna resay that. Bar 2 bulls that bought this, they're looking to press their positions. So when they see the successful breakout, they're gonna add to their positions. That makes one type of trader buying. The second type of trader buying is trapped bears. The bears that are limit order bears right here, they're trapped. They're gonna buy back shorts. That makes 2 types of traders buying. The third type of trader is us, the traders looking for a second leg because we understand the dynamic of the first 2 traders. This is how we start to get context. This is how we start to trade context and understand support and resistance flips because this was resistance and it flipped to support, so it's a good breakout. Did I say that right? Resistance, support. Yep. Follow through bar 5. It's not closing. It's closing above its midpoint, but it's not closing on its high, and it starts to get tail. Bulls get another gap here, so we know even more bears are underwater. Probably limit order bears shorting this breakdown point here, right around here. Bar, what is that, 5? Bar 6, bull bar closing on its high, creating another gap with bar 8. Bears are just getting trapped. We have three gaps open at the open, so that's trending behavior. Bar 9, what is that, that's bar 7, excuse me. Bar 8, bar closing on its high, and then bar 9 is that first shallow pullback. This was my first setup. A series of bars in one direction and a shallow pullback. Fade it and go for 1 hour. I was going for 1 hour of this, but for more probable, you would go for 1 hour of the bar like this or the range, but that's for another video. And look, that trade worked out very nicely today. Bar 10, bull bar sells off, bull bar closing on its high, so there's that first shallow pullback. Bar 11, bull bar closing on its high, that makes a gap with bar 12. We have so many bull bars, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 bull bars and 2 bear bars. So if you're looking to get short, really at you, the bears have to do some serious damage right now. The best the bears are going to do is get a training range, and that was right here. It broke out again. Bar 12, closing on its high. There's a small pullback here, so that's a fractal leg 2. Rallies for leg 3 here because there's another pullback. So these tails are pullbacks on smaller charts. Bar 14, follow through, but it has a big tail. And then now we finally see a big bear bar closing on its low. This is the first big bear bar closing on its low, and it's the second reversal. Something I like to ask myself is, so second leg is the highest probable trade, and we just went over why. Then we can start to, once we kind of get that context ingrained in us, once we get that context ingrained in us, then we can start to ask ourselves, is this leg strong enough to get a second leg? Are there going to be traders who bought here who want to press? Are there going to be bears who sell here and get trapped? And it did. But look, this was a weak second leg. So this leg got its second leg, and that was an overall third leg. Leg 1, pull back leg 2, pull back leg 3. I want to reiterate that legs do not have to be symmetrical. That took me a really long time to understand for some reason. Sorry. In the Discord, I asked people to ask me questions, and then I answered them in the breakdown. So I got tagged, so I was just checking to make sure I didn't miss any questions. But we're good. It was a different type of question. So yeah, if you guys have questions about the breakdowns and you want to talk about price action, please join the Discord and just ask me. Tag me in the question. Be like, can you answer this tomorrow breakdown? I will gladly do it. You know, I hope I'm making you guys better, because you guys are definitely making me better traders. So I hope I can repay you guys by doing these breakdowns. These things have grown into something I didn't expect, and I'm pretty excited to see where it goes without any expectations now. So bar 16, it's a bear bar, but it has a big tail. It's more of a wedge bottom. Push 1, pull back, push 2, pull back, push 3. Could buy this again because this leg shot to get second leg, but if you buy this, be very cognizant, be aware you're buying into a third leg. Got about 30 minutes of a leg anyway. So 17, bull bar closing its high. 18, bull body, more tail. 19, so there's a fractal 3 legs going on here. Leg 1, pull back. Leg 2, pause bar 20, so that's a pullback, and then leg 3, 21. 22, bear bar closing on its low with follow through 23 and 24. This is the first time bears got 3 bars down, good enough for a second leg, and they get that second leg with 26, 27. Leg 1, pull back. Leg 2, deep pull back. Leg 3. The best the bears can do is get a training range. Think about the bullet analogy. You shoot a bullet into a box. The momentum, if it's under 20 bars, the momentum is generally going to come out the same. So, well, that's just about 15 bars, I think. Okay, 17, 18 bars. So if this was the bullet shooting into the box, this is training range is the box. That's the box. That's the bullet. The momentum is generally going to come out the same. Since we had a training range, we have 5 pushes. Push 1, push 2, push 3, push 4, push 5. This could be a market cycle reset if the bulls can get the breakout. 33, 34, bullish breakout, and then create a gap with 32. Problem with this is this gap started with a bear bar. That's not a strong breakout. 35, bulls are already taking profits at new highs. So that tells you this breakout is a breakout, but it's not the same as this breakout down here. This breakout, bulls were buying highs. This breakout, bulls took profits at new highs. 36, bull bar closing just above its midpoint, has more tail, and then 38. Why am I so bad with this count? The number's right here. 37. Bull bar closing on its high, but not far past 36 range. So that could be a sign that we're going to go a little more sideways. Just how I mentioned on the daily chart, this bull bar is breaking out, but it's not going far past this bar's high. There could be sellers here. Bulls are going to keep going and trap the sellers here and create a gap. I think there is a small gap already, so bears are going to want to close the gap so they can get out, break even. Where are we? 39. Bear bar. It's a bear bar, but has more tail, trading range behavior. Same thing with 40, has more tail, trading range behavior. Start to go more sideways. There is 3 legs though. We can count this like 1, pull back like 2, pull back like 3. We could count this like 1, pull back like 2, pull back like 3. Why did I pick those points to be the leg? Because that's a new high. New high here, new high here, new high here. New high, pull back. New high, pull back. New high, pull back. You guys see? So there's a rhythm to it. So where were we? I think we were right around here. 43, bear bar, has more tail. Starting to get follow through. 42 was a new high, so bulls could be taking profits. Bears get a second 2-legged pullback into the EMA, which acts as a second leg trap. Leg 1, pull back leg 2. And on a smaller time frame, just 3 legs. Leg 1, pull back, leg 2, pull back. Let me do it again. Leg 1, pull back, leg 2, pull back, leg 3. Very fast wedge bottom or second leg trap on this time frame. Bulls bought the EMA again. They bought the EMA here. They bought the EMA again. 47 goes for another rally. Look at 47, 48. 47 is a good bull bar, but 48 is bad follow through. We actually went more sideways. Once the bulls tagged the EMA again, we found buyers and made a new high. 50, 53, 52, 53, 53. Good bear bar, good bull bar closing on its high. But again, here's the swing highs. Bulls are taking profits. So bulls are losing their conviction as the trend progresses. 55 bull bar. Where's the pen? Okay, there we go. 55 is a bull bar closing around its midpoint, more tail, and then we see a climactic bar. 56. 56 raced to a new high and sold off. So now we know that bulls are not willing to buy highs. They're taking profits at highs. And then we have a 3-bar bear micro channel, which also has 3 legs down. Leg 1, pull back, leg 2, pull back, leg 3. That's a wedge bottom in a bull regime. We're above the higher time frame, and then it rallies for 2 legs. Leg 1, pull back, leg 2. Coming very climactic. If you're looking to buy this, there's only about 12 bars left in the day. I think it's better to wait. You could catch this, and that would be a great bar. I'm happy for you if you did, but I'd also be asking, do you trade like that every day, or are you profitable, or are you losing? Past bar 72, first 30 minutes a day is hard to trade. Last 30 minutes a day could be hard to trade. If you trade a system, then I say let it fly. If you're trading discretionary, then just be a little more on your toes about the first 30 and the last 30. 66, bear bar closing on slow, follow through 50. 67. First time bears are getting a bar below the EMA. 68, and it gets follow through. 69. 69, it has bad follow through, has a tail, and it ends up rallying with 70. Now we went from bulls buying the EMA to look, they're selling right above the EMA. So the bulls that were underwater are trying to get out at an average price, and they get that with 70, 71, 72. 73, bull bar touching the EMA, sold off again. Bears and bulls are now getting trapped on here. I think more bears are getting trapped, looking for a collapse in the last final minutes of the day. 74, big bull bar closing on its high. 75, bull bar closing on its high. 76, bull bar closing on its high. This entire series is shown to get a second leg. And then look at 77, first trend line break. 78 could be that pullback. So now we're looking at a shallow pullback right here. And you get a good climactic rally with 79. Sideways price action 80, 81. So, yeah. Let me know if you guys have any questions. We're going to go over the measured moves right now. And then I think that'll be good. I stopped dropping the gaps, but I think there's a few more gaps. In terms of the market cycle, one way to read the market cycle is if we have open gaps, it's a trending market. If we have gaps that are closing, it's a sideways. It's a trading range market. So here's the first time bears were able to close a gap. I think I'm just eyeballing out to go back and look. Here's a bull gap. It gets closed here. Then this bear gap gets closed there. It gets closed right here. So gaps are closing, trending range behavior. Gaps stay open, trending behavior. Measured moves. Today's an interesting day for measured moves because I always think it's funny when I do measured moves on trend days because all the measured moves are going to get hit because the market's trending in one direction. But how can we be a little more accurate? So there's a 3-bar range. There's one measured move for you. There's a second leg range right here. I put it to the low of a pullback, bar 9, and that's actually met right around here. Market starts to go sideways. That's it. That's a there's the markets are taking the computers are taking profits at 1R. Here's another leg. And guys, when I do these measured moves, I'm not saying to enter. I'm not saying I'm entering at this middle line. I'm saying that's where the measured move starts. Measured moves are designed to keep us in one direction. So it's like, hey, bulls have an open measured move. Bulls have an open objective. If I want to get short, I have to wait for them to be taking profits right around here. It's not the end all and be all, but it is a one way to keep us in the right direction for a certain amount of time. I used to do that when I was first trading, and it helped me out a lot. Just thinking like, hey, if I want to get short, let me at least wait to the measured move. Here's your trading range from about 12.13 to 30 high, breaks out, and 1R is met on 67. Is that right? No, excuse me, 65. Here's another leg. The spike for this leg starts at this bear bar here, and then boom, 1R with 42. We go more sideways. It gets really. I wouldn't do any measure moves here because there's not 3 bars in a row. There's 3 bars here, but you'd get stopped out. Where would you put it? You'd have to do it around the EMA. You actually wouldn't get stopped out if you had a 1R stop, so that's interesting. And then here's another trading range. And that's met. So that was a quick way to do measure moves. I'm going to be doing an in-depth video of the measure moves for the members this weekend on Saturday. If you're not a member, hit the join button next down by where it says price action breakdowns. It says join. If not, if you need the link, just let me know and I'll send you that link. The members videos are going to be a pretty in-depth course that I'm going to just keep adding to through the years, and the more I learn, the more I can pass down, and I want my own pretty much training course through the members. And you guys will get a special Discord. So anyways, I've been rambling. We broke past the 20-minute mark. I try and keep these videos just around 20 minutes. Hope you guys had a good one. I always appreciate your support. Thank you, everyone. If you learned something, share the show. Don't be a hoe. And I'll talk to you guys tomorrow. It's Friday. Let's be smart. Use our stop loss. Don't do nothing silly. No oversizing. Stick to the plan. You guys have a good one. I'll talk to you later. Thank you for your time, everyone. Bye.